Howdy, folks, and welcome back to the Stock Charts TV studio in a cold and rainy, it's that time of year, Redmond, Washington. I'm wearing wool. It is officially fall. It's cold outside. I got my wool coat on. It's crazy. But we've got plenty to talk about here in the studio today. We got a market that is just a shout away from all-time highs. But I'm going to be honest, if you ask a lot of people, they would tell you that it doesn't feel that way. This has been a crazy, crazy market this year. We've got a lot to talk about, and the best place to look at all the action, the best place to study what's happening in the markets, what's happened in the markets, is, of course, our market summary dashboard. So that is what we are going to touch on today. I'm going to give you the 5 things that I am watching most closely on that market summary dashboard. Of course, if you're not familiar with what that page is, what that tool is, we'll take a quick look at it, give you a rundown of exactly what that thing is, how it can work for you, but you're going to really kind of see it in action today. We're going to take a look at, like I said, those 5 things that I'm watching most closely, give you a bit of a, how I'm using it kind of run through on this page. And at the end, I'm also going to give you a bonus. There's kind of a bonus number 6 that I want to throw your way. Kind of brings together the 5 items that we're going to talk about. So you'll see that at the end as well. But excited to run you through the page, excited to talk markets on the show today. So without further ado, let's jump over to Stock Charts and get it going. All right, everyone. So first and foremost, this is the market summary dashboard. You can get to this page, you can get to this resource on StockCharts.com by going up to the market analysis tab and selecting that market summary option. Now, we designed this page earlier this year. We rolled this thing out at the start of 2025. And as I kind of just scroll through here to give you a sense of everything that's on this page, if you haven't seen it before, we designed this page to be a true all-in-one resource for understanding everything that's happening in the markets. This page is about drilling down. It's about starting at that top level with what's happening across the major indexes, but drilling down beneath the surface into market internals, understanding what's really driving those indexes beneath the surface, drilling into sectors and industry groups, key ratios, other asset classes as well. So we've got ratios here between the different major asset classes. We've got bonds. We've got a whole bunch of other commodities, currencies, cryptos. It's all on this page. We even have economic data at the bottom, things like U.S. GDP, U.S. unemployment, manufacturing numbers, lots and lots of stuff. It is a huge resource. It is fantastic. And it's really designed around the way that, most of us as professional investors, as professional market analysts, most of us look at the markets kind of in the same way. And so all of that stuff is really built into this page for you. Whether you are new to the markets or whether you've been doing this for a long time, you can really sit with this page, study this page, and kind of have everything that you need at your fingertips. I'm going to go out on a limb and I'm going to say it. If it's not on this dashboard, you probably don't need it. Now, one of the things that you're going to see as we go through this today as well, one of the things that I like to highlight is that there's more to this page than kind of initially meets the eye. So it's not just about the different tabs here and all the different tables and the different views and things. It's also up in the top right corner of most of these panels. You've got these different chart menus. You've got these different chart links, which will take you out from those kind of table views to individual charts that relate to whatever you've clicked on. So we're going to use that feature today, but it's one that I like to highlight. As you go through this page, remember that for a lot of those different panels, you can open up those chart links, and it'll actually lead you, kind of from the data that you're seeing in table format over to some specific charts. In a lot of cases as well, we've built in kind of extra charts that you might want to look at. If you're thinking about breadth, well, you might want to think about something like the Zweig breadth thrust or the McClellan indicators. So there's even kind of more than meets the eye with those different chart menus as you go through that page. So a great, great resource. Finally, I got to touch on this. We'll talk about it at the end as well. But down here at the very, very bottom of the page, there is a big blue card that talks about the market summary chart pack. Now, all of the different categories, all the different groups, all the different charts that are associated with the symbols on this page, we have organized those into what's called a chart pack. So if you want to get all of the different charts, all the organization, the structure of this page, if you want to have charts that follow along with the market summary dashboard, you can install all of those in your StockCharts account in just one click. So you can look for this big blue box down at the bottom of the page. explore that chart pack. It's going to give you, I think it's 30 or 31 lists, chart lists that are full of charts pre-created for you that track along with that market summary dashboard. It is a fantastic complement to the page, really kind of takes your StockCharts account, I would say, to the next level, takes your use of this page definitely to the next level. So if you're interested in how this page is set up, all of the different charts that we've created here, the list that we've created, all of the stuff that's on this page, you don't have to recreate it yourself. You can install that chart pack. You're going to get all those lists. You're going to get all those symbols, those pre-created charts. And from there, you can start to modify them, customize them, make them your own, all of that good stuff. But that chart pack is an invaluable resource and really a great extension off of this page. Now, speaking of this page, this is a resource that I use every single day. And that doesn't mean that I use every single part of this page every single day. But it is a resource that I turn to at the start of every session and after every session ends. It is a great way to see what's happening on an intraday basis, but also with this time frame menu up at the top left corner, you can also see what's happened over larger periods of time, 1 week, 1 month, 3 months, year to date, different things like that. So this is a great place to come every day, breeze through some of the things you're going to want to use every single day. The equities panel, for instance. If you're following markets, you're going to want to understand what's happening across the major indexes every single day. There are different elements of this page. For instance, down at the bottom, we highlighted those economic indicators. Obviously, not something that's going to change every single day. So this might be something that you want to have there on a monthly basis or on a quarterly basis. You want to know that these are there. Doesn't mean you have to use them every single day. Maybe some of these asset classes, you're not trading commodities, you're not into currencies, maybe you don't touch cryptos. So you don't really need to look at this every single day, but to know that it's here, to know that you have the option to come and breeze through these different things. Some things might be daily use for you, some things might be weekly, monthly, quarterly, whatever cadence you want to use it. I would say having all of the data that is available on this page kind of all in one place is a fantastic tool. But like I said, I use this page every single day. And there are parts of it that I'm looking at consistently. There are parts of it that are more important at some times, less important at others. So today, what we wanted to run through was the 5 things that I think are most crucial for where we're at with this market right now. Now, it's an interesting time, right? We've got the S&P 500 a couple percentage points off of all-time highs. The Dow, as of yesterday, made a new all-time high. So this market has been incredibly strong. But if you ask a lot of people, they'll tell you, gosh, it just doesn't feel that way. Despite the VIX not being that high, despite breadth really not being that bad and actually starting to improve a little bit, there's a lot more fear, I think, among market participants right now than might actually be justified. But perhaps that's kind of leading us into a weaker end of the year. We'll see. Regardless, this is the type of page that you can use to track all of those things that are happening, to think about not just the major indexes, but also the internals that are driving those indexes beneath the surface. So I want to highlight the 5 things that I'm watching most closely on this page right now. Now, first up is going to be trend, specifically trend. I am a big believer that you need to look at less. Despite all the data, all the resources that are on this page, I think that a lot of people would be really, really well off with a simple couple of charts of large caps, the S&P 500, mid caps, the S&P 400, and small caps, the S&P 600. If you just started with those 3 charts and a simple look at them, just price and just a couple of moving averages, and you thought about the markets through that incredibly simple 3-chart lens, I think most of us will be better off. Now, in this case, though, we got a whole bunch of indexes that we can look at, and we're going to do that in just a second. But I'm specifically thinking about the trend of the market right now. We've seen an incredibly strong trend off of those lows from earlier this year. At some point, we know that that is going to change. That's what I'm watching most closely right now, though. And specifically, the tools that I'm using to do it, I'm watching those key moving averages incredibly closely. So I'm doing that in a couple of different ways on this page. If you look at a couple of these different tables, right, you've got the indexes over here on the left, you've got price data there, we've got our streak data as well, which is an interesting way to think about the strength of the market, not just on a daily basis, but a weekly basis. But to the right of that, we have a couple of columns dedicated to the classic set of key moving averages, the 20-day exponential, the 50-day simple, and the 200-day simple. Now, what these columns are going to tell you is how we are trading relative to those respective moving averages for those different indexes. So what I'm watching most closely is how many of these indexes are trading above or below their 20-day, their 50-day, and their 200-day, respectively. Now, in this case, we can see that for all of these major indexes that we track, if we look down the 200-day column, all of them are sitting above their 200-day moving average. Not surprising given the trend that we have seen off of those lows. We can sort by the 50 to see that the majority of these indexes are also above their 50-day. The only ones that are trading there below are the S&P 400 mid-caps and then some of the smaller cap indexes, the S&P 600 micro-caps and the Russell 2. What I'm watching most closely right now is how we're trading relative to those 20-day exponential moving averages. So we can see that a couple of those indexes, the Dow stuff in particular, trading above those 20 days. But a lot of these indexes are finally starting to lose it, especially today. We're seeing a lot more weakness in the market today. We can see that highlighted with these mini charts up at the very top of the screen. So we're starting to lose the 20-day. I'm watching those moving averages very, very closely. I'm doing it through the table view. But again, we mentioned the chart links. I'm also doing this through the chart view. This is a great way to watch these indexes. You want to watch them through that table view, but you also, of course, want to look at the charts themselves. So you can quickly open up those major US indexes in chart form. This is going to give you clean and simple pre-built charts that you can use to watch those indexes and watch those key moving averages. It's going to give you the 20 in blue, the exponential 20 in blue, the 50 in red, and the 200 in green. So I'm spending time every single day making sure that this is a list I pour over. I want to make sure that I'm watching the trend of this market, watching some of those key moving averages, and I'm using this list in particular to do it. Makes it incredibly easy. Again, you don't have to build all this stuff for you, on your own. We've done that heavy lifting for you. You can simply scroll through all of these different charts and see all of those major indexes in one place. It is a great, great, great resource. So I'm watching those charts incredibly closely. I'm also doing it through that table view. But thinking about the trend of this market, at some point, we know that trend is going to break. It's a matter of when, not if. And we're using these charts and these tables to do that, to watch that action. So that is the first thing that I'm watching, trend of this market. Absolutely crucial, especially at a time like this when we've seen such a steady trend off of those lows. We want to keep a close eye on that. Next up, we talked about the value of this page allowing us to drill into market internals. So that is next on my list. I start to drill into market internals, specifically some of the breadth panels. Now, these are things that I absolutely love to highlight on this page. I love the view here highlighting breadth. Think about breadth, right, as participation. If you're not familiar with what breadth means, it means participation in the market. A market is a collection of stocks. It's not just these major indexes sitting up there. We think about the S&P 500 and the Dow and the NASDAQ, right? But all of those are a collection of individual stocks. So we want to drill down beneath the surface into the internals of that market and think about the individual stocks that are actually driving those indexes. These panels down here on the Market Summary Dashboard allow us to do that. So in the breadth panel, we can see advancing and declining issues on the day. I love to look at that, as well as sector advancers and decliners. So what percentage in those different sectors are advancing or declining on the day. The one that I really want to highlight here, though, today is the moving averages view. I love this table. It is a great way to think about the market and the way that we've color-coded this as well. So really simple, kind of like a traffic light, right? You got green is good, you got yellow is kind of slow down, and you got red is stop, red is bad. If you see a lot of yellow on this page, it means that breadth is in kind of a neutral zone, right? So not exactly the all-star breadth that we really want to see out of an incredibly strong market, but that makes sense given kind of how far we've come for this market. At the same time, not a lot of red on this screen, right? We've got just as much green as red, a lot of yellow across the breadth board here. So we can see the percentage of stocks across these major indexes above those 20-day, 50-day, 100-day, and 200-day moving averages. We can see that breadth is really kind of stuck in this sort of neutral zone. We've got a lot of yellow on the MA breadth board right now. The key, though, is not just where the numbers are right now. Again, we want some context to this. We want to bring in the charts. We want to think about how these breadth numbers are moving over a longer period of time. So again, we're going to turn to our charts menu. Now, we highlighted this one actually earlier in the show. This was one of the ones that I brought up because it's a great place to go. Lots of different breadth charts in here and chart lists in here. So definitely one that you should spend a little bit of time getting to know. We're going to jump over to our moving averages list, though. What this is going to do, it's going to take those indexes from that table and it's going to chart all of those values over time. These are indexes you can add to your charts. Or, in this case, we've already done that work for you. So all you have to do is pull up this list and you got those great breadth charts right there in your own account. We can see now a little bit more context to where these numbers have come from and where these numbers are going. So for instance, in the NYSE, right, we can see the percentage of stocks above their own 20-day, 50-day, 100-day, and 200-day, just like we had on the table. We've color-coded those, so the blue ones are always going to be the 20-day. As we scroll through this list, red, orange, and green are always going to be the same. So really nice and easy to see. We can see that breadth is obviously off the highs that we saw earlier in the year. But what's interesting when I look at this chart is that breadth is actually starting to kind of recover, right? We're holding some key levels, and in the last month or so, right, we've actually seen a lot of these numbers start to tick higher. So a lot of these breadth indexes are actually starting to turn, to kind of break those downtrends and actually start to head a little bit higher. So breadth is actually kind of improving here beneath the surface. Again, I think that bucks the trend of what a lot of people would say about this market. People would say, oh my God, breadth must be just absolutely terrible. It's getting worse, it's getting worse, it's getting worse. But if you actually go, you pull up the charts, you do a little bit of the digging for yourself, you can see that breadth is actually starting to recover for a couple of these averages. NASDAQ breadth doesn't look like it's getting as much of a recovery here, but we can continue to pour through these different indexes. We can look at mega cap breadth, the S&P 100 there. The one that a lot of people love to look at, myself included, obviously the S&P 500. That's where we're really starting to see some of these numbers tick up, especially stocks above their 20-day and stocks above their 50-day, really starting to actually move higher. So great to see the context for these different breadth indexes, right? These are charts that I'm keeping a very, very close eye on. Breadth is absolutely crucial, especially when we get to a time like this where there's a lot of questions about the market topping out. When is the market going to turn? When is that trend going to break? Breadth is one of the key ways that market strategists, professional market strategists, follow the market. So dig into those internals, use those tables there on the Market Summary Dashboard, but also make sure that you're using those charts for even more sort of context for those different indexes that you're following. Another one to highlight as well is the bullish percent indexes. So this is going to measure the percentage of stocks within those major indexes that are on a PNF buy signal. Again, we can see a lot of kind of neutral zone numbers on those BPIs. It's really easy to flip over to this major BPIs chart and actually kind of get that all in one place. Again, we can see that those numbers have been declining, but we're starting to see a little bit of a pickup in some of those numbers. So we want to see those continue if we're going to stay bullish on this market. We want to see those BPIs continue to recover and start to actually move higher. But really nice to be able to actually see that chart right on this page without having to jump anywhere else. So that's number two. I'm watching breadth incredibly closely. I think second only to trend, that's the most important thing you got to be watching for this market right now. Now, drilling in again into internals, this is kind of an extension off of the breadth conversation, but I'm specifically looking at new highs and new lows right now. This is a crucial view. So this is my sort of third piece that I'm watching really closely on the Market Summary Dashboard right now. We've got the new highs and new lows panels on this page. Great resource. I love to point to this. Really nice way to kind of think about the markets, think about strength. What percentage of stocks in these different indexes are making all-time highs or 52-week highs or 6-month highs. For all of these, by the way, if you want to actually see the individual stocks that are making those new highs or those new lows, you can always click to actually run that scan that we're using kind of behind the scenes and pull up that data. So if you want to see all of the 8 stocks in the S&P 100 that are making a new 9-month high right now, you can do that really, really easily. Just click on those numbers. Really nice to be able to see that. We've got the same thing for weekly highs as well. So stocks making a new weekly high across those different time frames, not just a daily high, but at some point this week, what percentage of the S&P 500 has made a new 52-week high, for instance. So a little bit of a zoomed out view if you want to step back and think about the week as a whole, not just today. But what I want to show you on this page is a really, really nice way to set this up. Again, we looked at that chart tab for the major BPIs. We've done the same thing here for new highs and for new lows. So you can click over to the chart tab and you can actually see some of these numbers for those major indexes with a little bit more context, really similar to what we just did with the major BPIs. The thing that I specifically love to do for myself and love to point others to is to actually set this up for both the new highs and the new lows panel. Now, if you're on a screen that's wide enough, you can get both of these charts right next to each other. This is a great way to think about new highs and new lows simultaneously. Think about those new highs and new lows lists and the direction that those lists are going in, the direction that those numbers are going in. And to be able to see it side by side for the same indexes is a really, really helpful view. Makes it really obvious when we get, big spikes in new lows like we saw in April near the lows, right? You can see those incredibly easily. When you see, new highs drying up, it's really easy to see those green bars just absolutely disappear. Right now, I would say, we're still seeing not a lot of new lows, and we're seeing clearly more highs than lows. That tracks, obviously, with a market that's trading up near all-time highs. But I'm looking specifically kind of where these different lists are going. We're starting to see, Dow obviously making new highs. That makes sense given the all-time highs we saw yesterday. We want to see these lists, if we're going to stay bullish on this market, we want to see these lists continue to stay strong, and we want to see, not a lot of stocks making new lows. That bearish activity is something that we want to stay away from. We want to keep our eyes on the bullish side. So if we're going to stay bullish on this market, we want to see these new highs lists continue to stay strong. But being able to kind of put these lists side by side is a great feature of the Market Summary Dashboard, something that I love to do. I also love to use the table views and actually pull up those individual names, kind of study those as well. But this is a view that I always love to point people to, having those charts side by side. I'm watching new highs, I'm watching new lows, I'm doing it at the same time here on the Market Summary Dashboard. It's a great way to use this page. So that's number 3. We've got sort of 2 hits on internals. We've got Brett specifically, and then also diving into those new highs and new lows lists. I think a crucial thing to be watching for this market right now. Now, number 4 for me is going to be thinking about fear in the market, right? Shockingly, given the market that we've seen, given the proximity to all-time highs for so many of those different averages, we've seen a lot more fear than we would typically see at new highs, right? We've seen a lot of people just saying, this doesn't make sense, this is crazy, I'm worried, I'm cautious. And we've seen some of those fear gauges actually kind of tick up, which is surprising and kind of doesn't jive with the idea that markets are actually near all-time highs. So I'm thinking about fear in the market. Again, I'm not just going to kind of think about it on Twitter and say, oh my God, I got a lot of people tweeting about how scared they are about this market. We're going to be good technicians. We're going to be good strategists. We're going to focus on the data. And to do that, we're going to use some of these panels on the Market Summary Dashboard. Specifically, I'm going to stay focused on the sentiment panel. This is a great place to go to think about fear in the market. Now, right now, we actually, if we're looking at the data on this page, we're thinking about where the VIX is at, where some of these put-call ratios are at, what active managers are doing, different things like that. Fear is really not that high. We're starting to see the VIX tick up a little bit. As we can see, VIX over 20, that is starting to get into a little bit more of a cautious kind of territory for the VIX there. But a lot of these, as you're going to see in just a sec, a lot of these are really not screaming fear to me. That said, it's something I'm watching for, right? It's something I'm keeping a close eye on. If we do see more fear enter into this market, if we do see that trend start to break, if we do see breadth start to deteriorate, one of the things that I'm going to also be looking at is some of these different kind of fear measurements here. What is the sentiment of this market, right? This is what this panel allows us to do. So being able to see some of these key indexes, some of these key sentiment indexes right here, like the VIX, different put-call ratios, not just total put calls, but also equity only and index only. And then the NAAIM, the Name Exposure Index, that measures what active investment managers, professional money managers, are doing. We've also got the AAII Bulls versus Bears survey, so what individual investors are doing. You can think about all of these different kind of sentiment metrics, right? And you can put it all in one place on this table here in the sentiment panel. Again, though, we got to jump over to the charts for a little bit more context. That's what we really want. We want to check up on some of these values, but what we really want to see is the context, the history to some of those key indexes. So obviously, I'm watching the VIX really, really closely. This is a great place to do it. We've got our small little VIX chart here with a couple of key metrics key levels on the VIX drawn for you. So that kind of complacent level, that really, really bullish level down there at 15, that's that green line. Again, we're starting to see the VIX tick up over that 20 level, over that orange line, right? So we're getting into a little bit more of a fear kind of territory. This is kind of one of our first pops. We had one a couple days ago, but one of our first pops over that 20 level in a little while. So keep a close eye on the VIX. This is a great place to do it. But again, we're not really up into crazy, crazy fear territory. Just starting to cross above 20 isn't anything to be too worried about, but definitely something to be keeping a close eye on. I'm keeping a close eye on the positioning and exposure chart. That's what we call it as well. So you can do that, again, right from this panel here. This is going to put the put-call ratios and that name exposure index on one chart for you. The reason we do that, the reason I love this chart, it tells you basically how traders are positioning in the market and how active investment managers are positioning in the market. So up in the top panel, this is actually inverted to kind of follow along with the market a little bit better. But if we're below that green line, right, that means that traders are incredibly complacent. Traders are far more bullish than bearish, leveraging calls, much more than puts. So put-call ratios below that green line on this chart mean we're in kind of that bullish, complacent zone in the trading community, options traders, right? If we're above that green line, we're kind of in neutral territory. And there's actually a red line on this chart as well. If we get above that red line, it means that we are very, very bearish. It means that traders are out there saying, we are incredibly pessimistic. We're all in on puts. We're definitely playing the short side of this market, betting that the market is going to go down. So watch that. Watch how traders are kind of positioning in the market using that put-call ratio right there. Below that, you can compare it to kind of how active investment managers from the name exposure index are positioning. So in this case, we can see active investment managers, which are surveyed on a weekly basis, about just shy of 90% long on the market. These numbers can actually, thanks to leverage, these numbers can actually get above 100, which we saw just a couple of weeks ago. So we're off of those kind of highs in the name exposure index, but still, active investment managers are very exposed, very long on this market. We're not seeing fear the way that we saw, for instance, in the April lows, right? Active investment managers taking a lot of money off the table, not long on the markets. Right now, we're seeing pretty strong numbers from those active investment managers. Again, a little bit off the highs, but still some pretty strong numbers. So I'm watching this very, very closely, again, to gauge sentiment, to gauge fear, to gauge how we're positioning in the market, using data, not just guesswork based on Twitter and the news media and things like that. We're using data, we're following the charts, and we're keeping a close eye on some of those key fear metrics for this market. I love this positioning exposure chart. It is a great one to use. And like we have with so many of those other panels, of course, you've got those different chart lists right up here. Or if you want to click on any of these charts, you can open up a full featured version, for instance, of that positioning exposure chart. There you got a little bit more history, so now you can actually see that red line. So when we're above that red line, it means that traders are incredibly pessimistic. When we're below that green line, traders are incredibly optimistic. Right now, we're kind of in that neutral zone, so we will see. But definitely being able to compare those two, something I'm watching closely. So that sentiment panel, lots packed in there, especially when you add in the charts. Now, number 5, we're going on to my 5th and final thing that I'm watching very, very closely for this market right now. I'm thinking about the personality of this market, right? I'm thinking about the character of this market. Again, gets into kind of sentiment and positioning. Where is money flowing? What is leading? What is lagging? But to do that, I'm using specifically the key ratios panel. Also using the sectors panel, also using the market factors panels. We're going to look at those in just a sec. But right here next to that sentiment panel, we've got our key ratios panel. This allows you to judge the personality or the character of the market, right? If we have a bullish market that people are just absolutely jazzed about, we're going to see more offensive, more growth-oriented corners of the market leading. We're going to see things like discretionary beating staples. On the flip side, if we see staples start to lead discretionary, it means that there's a lot more pessimism in the market. It means that there's a lot more caution in the market. And it tells you something about that kind of personality, right? What is the personality of this market? Is it offensive? Is it excited? Is it bullish? Is it optimistic? Or is it more cautious, more scared, more fear-driven, more pessimistic? That's what some of these key ratios allow you to think about, right? So we've got 2 flavors of discretionary versus staples, again, offense versus defense. If discretionary is leading, that's offensive. If staples is leading, that's defensive. If this ratio is green, that means that the first thing is leading. If it's red, that means that the second thing is leading. Nice kind of simple way to think about it, right? So in this case, today, we can see staples is actually outperforming discretionary. Again, we can use that time frame menu in the top left corner of the page. It kind of actually scrolls with you to change the time frame on this. So if we wanted to think about, for instance, how some of those key ratios have performed over the last 1 month, over the last 3 months, we can use that time frame menu right there. I'm keeping a close eye on these key ratios, though, to understand how this market, what's kind of the flavor, the personality, the character of this market. Again, are we more of an offensive kind of mindset, or are we starting to get a little bit more defensive? That's what these different ratios are going to tell you. So we've got our two flavors of discretionary versus staples. We've got the standard cap weight version using XLY versus XLP. We also have an equal weight version, which kind of takes out some of the market cap influence from that ratio. Next up, we have technology versus utilities, right? If technology is outperforming utilities, things are a lot more offensive than defensive. If we start to see utilities outperforming the big tech stocks, well, that tells you something. We're getting a lot more defensive with our personality of that market. Next up, we also have biotech versus healthcare. Healthcare, a really, really interesting sector of the market because it's got some of these different kind of offensive and defensive corners to it. Things like biotech, a lot more offensive than defensive. So if biotech is leading the healthcare sector, that tells you that we're in a little bit more of an offensive kind of flavor. We've also got a really interesting ratio, which is hotels versus utilities. Basically, stay at home versus go out. Another way to think about that kind of offensive versus defensive personality to the market. We can also do this in a couple of different ways. We can do it through size. If we see, large caps leading versus micro caps and small caps leading, we can do it through different factors like growth versus value or high beta versus low volatility. All of the different ratios in these, especially in these first three tabs, really are intended to tell you offense versus defense, optimism versus pessimism, bullish versus bearish, those kinds of flavors for the market. So those couple tabs I am keeping a very, very close eye on. I also mentioned, of course, the market factors panel. This is another way to think about those ideas. Again, works with the time frame menu as well, so you can change those time frames to see these numbers move around on you. But this is going to tell you for those different cap levels, large, mid, and small cap stocks, across all of these different factors, what's leading, what's lagging, what's outperforming, what's underperforming. This is going to tell you the kind of spirit of that market. So, for instance, today we've got a little bit of selling going on in the market. We've got a weekday across the board for most of the major indexes. And in this case, we can see that growth is absolutely getting hit. Growth is absolutely getting slammed. Value stocks holding up a little bit better than growth. So that tells you a little bit about that kind of character of the move today. When we zoom out, we think about this over the last 1 week or over the last 1 month. Again, we can drill into this little map to understand the character of the market that we have on our hands right now. So this is another thing that I'm watching very, very closely on this page, thinking about some of these different factors. Now, it's easy to use the basic one. That just gives you value versus core versus growth. I like to use the extended map, though. That gives you a lot more of these different factors, brings in things like revenue, momentum, low volatility, and quality. And once again, if you want to open up the charts for all of those different market factors and actually see how those different funds are moving around, they're all ETFs, they're all trading during the day, so it's a great way to actually study up on what's happening across those different factors. Finally, I mentioned the sectors. That's another way that I'm thinking about the personality or the character of this market, very similar to the offensive versus defensive kind of conversations we've been having. Here in the US sectors panel, I'm specifically using the Scooter score. So we've got all of our sectors loaded into here to this table, as well as the key index for that group. We've got cap weight, equal weight, and small cap sectors in here. So key factor there. You can actually think about the sectors in a couple of different ways. For instance, for cap weight, we've got the S&P 500, and I'm specifically, like I said, using the Scooter score to think about the personality of this market. So that Scooter score is going to rank all of those different sectors, and it's going to rank the S&P 500. So you can actually think about which sectors are beating the S&P 500, which sectors have a higher Scooter score than the index itself. But we can also think about which sectors are towards the top, which sectors are stronger on a technical basis, and which sectors are towards the bottom, a lot weaker on a technical basis. When we see staples and real estate down at the bottom, well, that kind of makes me happy. More defensive corners of the market down at the bottom. That means the more defensive sectors are not leading. At the same time, healthcare, the leading scooter sector right now, not great. Healthcare, again, a bit of a split sector, but a lot more traditionally, a lot more defensive than offensive. So not exactly what I want to see, but at the same time, that's weighted against tech continuing to stay relatively strong, a pretty high scooter score there, outperforming the market. The only two that are actually outperforming the S&P 500 right now on the cap weight sector table, healthcare and technology. So keep a close eye on that U.S. sectors panel. I think that is a crucial one. And again, drill down beneath the surface. It's not just about the cap-weighted sectors that are going to be heavily influenced by things like NVIDIA and Apple. We also want to think about the equal weight sectors. That's going to take that market cap influence out. And further down the cap tiers, we want to think about what's happening at the small cap level as well. That tells us where some of that strength is kind of coming across the board, across different cap levels. So being able to see all of those together, really, really helpful. By the way, if you want to see those kind of primary sectors here in mini chart format, this is a really nice place to follow the sectors on a daily basis. Again, also follows along with the time frame menu, so you can change those to get some different charts. But being able to see those little mini charts for the U.S. sectors, something I like to do on a daily basis. So I'm thinking about the personality, the character of that market, kind of thinking about what the vibe is. Basically, that's kind of another way to think about it. You can also use the U.S. industries, specifically the bellwether tab, to think about the personality of this market. Again, these are kind of all leading industries, a little bit more offensive, growthy, bullish sectors when they're leading, bullish industries when they're leading. So if these are lagging the S&P 500, again, use that little scooter trick. You can see where they're sort of sitting relative to the S&P 500 itself. When all of these, except for semiconductors, are actually lagging the S&P 500, that's not really great. Retail and home builders especially being so low definitely tells me that's a little bit more of a defensive posturing from those bellwether industries. Those typically kind of lead or lag the market. So another one that I am kind of keeping a close eye on. So that's 5 for me. Again, we hit the trend of the market. We thought about internals in kind of 2 different ways. We thought about breadth specifically, and then also new highs and new lows. We're keeping a close eye on those sentiment indexes, keeping a close eye on what's happening with those different fear measurements, right? Thinking about positioning and exposure in the markets. We're also thinking about the character, the personality of this market. More offensive, more defensive, more growth-oriented, more value-oriented, different ratios like that. I mentioned that I had a little bonus for you. So before we sign off here, one bonus that I do have for you. In that key ratios panel, open up that charts menu, and there's a link right at the bottom there to the ultimate S&P 500 chart. This is something I created years ago that I absolutely love. It really kind of brings together a lot of these different things. Again, I mentioned earlier in the show, I think that 3-chart model for so many of us is actually a great way to think about the markets. If you just had an incredibly simple price and a couple moving averages chart for the S&P 500, 400, and 600, you probably know more about the markets just by looking at those 3 charts than studying dozens and dozens and dozens of charts. This is kind of in that same spirit, the ultimate S&P 500 chart. It takes a lot of those different ratios and different concepts that we were thinking about in the show today, puts them all on one chart for you. So you've got the S&P 500 itself up here with 2 key moving averages, just the 50 and the 200, as well as volume there. And then down below, we've added a whole bunch of different key indexes, key ratios, different things that you can use to track, again, the character, the spirit of that market. So we've got percentage of stocks above their 200-day moving average. That is the blue line right here. We've got offense versus defensive ratios, the consumer discretionary versus staples ratio right there. We've got growth versus value, high beta versus low volatility. How is momentum holding up relative to the S&P 500? Momentum rolling over at the moment. That's interesting to see. We've also got some different cap level comparisons. So mid caps, the S&P 400 versus large caps, the S&P 600 small caps versus large caps. Both of those heavily underperforming the S&P 500 overall. We've also got how the equal weighted S&P 500 is performing relative to the traditional cap weighted. Kind of a breadth measurement, tells you a little bit about internals, how the big stocks are trading relative to the smaller stocks in the S&P 500 itself. And finally, we've got stocks versus bonds with SPY versus TLT there. So it kind of brings together a lot of those all into one chart. Now, you can take this and again, use it as a template, use it as a starter. Maybe you've got your ratios that you want to add to your own ultimate S&P 500 chart. If you've got other ones, use this as a starter. You can pick it up from here, change out any of those ratios, but the chart is kind of pre-built for you. So it gives you a nice way, rather than having to go create that thing from scratch yourself. This is a great way to see so many different things kind of all on one chart. And if you're looking for a great starter to kind of build one of those for yourself, the ultimate S&P 500 chart is a great template for you. But I think out of the box, it's an incredibly important chart to be watching. That's why we named it the ultimate S&P 500 chart. Maybe it's the only one you ever need from now until the rest of the time. Who knows? But definitely a great place to start and a great place to see so many different things. Again, maybe it's one of those charts that you want to pull up every single day, just kind of study what's happening. Maybe you want it to be a shorter time frame. Maybe you're a longer term investor. You want to narrow or zoom it out a little bit. But a great way to watch the market, thinking about those different key ratios, all relating back to stocks in the S&P 500 itself. So guys, I want to thank you so much for tuning into the show today. It's been a lot of fun to walk you through that market summary dashboard. Again, there's so much there, but even more than kind of meets the eye, more than just there on the surface with those different chart links, and also with that market summary chart pack. That is a crucial part of that page. If you're a StockCharts member, make sure you install that in your account. Again, it doesn't have to be kind of the end result. You can install that chart pack and then customize them. Use the structure that we've built there. Add your own indicators, add your own custom settings, add other indexes. If there's other things that you want to follow within the structure of that dashboard, that market summary chart pack is going to be a great starting place for you. But if you like what we've built with the market summary dashboard, the chart pack, the accompanying chart pack, you can install just down at the bottom of that dashboard. It is a great resource, a great way to get great charts, great lists, all organized, all built for you right into your account in just one click. So remember, if you're a StockCharts member, which you all should be, that is a great way to quickly and easily expand your capabilities, expand the view that you have there through your StockCharts account. Thank you again, though, for tuning in here on StockCharts TV. Always fun to rock with you in the studio. Again, my name is Grayson Roze. I'm the Chief Strategist here at StockCharts.com. Always great to be with you. Remember, give this video a like if you had fun with me today, and subscribe to the channel. We got so much great content every single week. Always something happening here on StockCharts TV. One of the best ways to follow the market is through our excellent team of expert contributors here on StockCharts TV. So make sure you subscribe to the channel. And speaking of subscribe, make sure that you are a StockCharts member. If you want to take advantage of these different tools that we're covering today, you got to be a StockCharts member to do it. So start your free trial right now. It's a perfect time of the year to do it too, because we got some big sales coming for Black Friday, Cyber Monday, all of that happening at the end of this month. You can get started with your StockCharts account right now, and when those sales hit, that free 1-month trial is going to take you into those sales. So you'll get a big discount at the end of the month. So sign up right now for a free trial if you haven't already. Got to be a StockCharts member, got to take advantage of all these different tools that we use here on the channel every single day. So thank you again, guys, for tuning in. We'll see you again soon for another one. But until then, of course, keep calm and chart on, my friends.